program that we call MyStockScanner Live. It's powered by 3-Point Playbook. Every day we cut through the noise, we break down the headlines and run the stocks that matter through 3 simple questions. Is it a quality company? Does it have an upside? And is now the right time to buy? It comes out to smarter picks, more confidence and less stress. And these two guys are smarter, they're confident, and they also look less stressful. Hans Henrik Nielsen and Liam Flavel. Are you guys in the mood for tacos?
Yeah, I know where you're going with that.
I know. I will serve them, and I'll do it while we take you on a roller coaster that the market has been on since Friday. We will take and talk about gold, silver, crypto, rare earth metals, MP materials, GM, TSM, and Novo Nordic. The latter because it was lowered by SEB Bank. Is it fair? We will give you an answer to that question towards the end of the show. But before we get that far, I have a quick question because when I look at the Danish markets right now, Vestas is down by 4.3 at the moment. What's going on, guys?
Yeah, that is a bit weird, especially because Ørsted is up. But the problem for Vestas is that they have been hit by a kind of a triple whammy. They have problems with the green tech projects in US. A lot of the projects are using components coming in from China that is now maybe getting 100% extra tariff, who knows? And then there is the extra fee for docking into the ports when coming from China. So it's a bit of a bad day for them.
And we'll keep an eye out for them, and as we will with other stocks. And also towards the end of the show, when we talk Novo Nordic, we'll talk the secret behind the number of the day, which is $25.87, and that's every second. It's not the 3-Point Playbook overhead for the day. We will look into the portfolio for the 3-Point Playbook later in the show and see how it's doing. But I'll start with you guys. How was your weekend after that Friday close of the market in Europe, and then what happened at the close of the market in the US? How was your weekend?
Chilled.
Yeah. Calm.
We
collected.
sleep well at night.
You do?
That's what,
okay.
You know what?
That's what we do.
Yeah.
We have our structure. We have our 3-Point Playbook. We are only about 2/3 exposed into the market in our portfolio right now. We've been through 20 crashes over the years, so fairly calm.
Well, the thing was that I think a user, they didn't write us, but you can on FOMO at MyStockScanner.com, but somebody talked about Black Friday, and you guys go easy, Black Betty, that's way too soon. I know that the Asian shares are suffering during the morning here, and if we look at the futures, US look to go up, Europe sort of mixed, and gold and silver up, crypto bounce back. You guys say, don't panic, love to learn volatility. You have to explain how you learn to love that.
It's hard to love, but you have to accept it. And the reason why we can get a higher performance in the market that, for instance, in a government bond is because we are being paid to take some volatility risk, meaning that the stocks and the markets will fluctuate. It will go up and down from time to time. That is kind of the price we are paying to get that performance. So if we can't accept that, we cannot get the extra performance.
And we will look at the 3-Point Playbook portfolio just a second, because there was some news that came out this morning that maybe also was a little sugar on the cake, or icing on the cake, if we say that, because China's export to US did drop in September, but it rose on a global shipment. It hit a 6-month high. Do they have new play friends? Is that what we're seeing?
Yes. China are China are making long-term plans compared to someone else they're playing with, and that means that after the tariff war in 17 and 18, they already had plans in place, but they put them on speed because they didn't want to be caught in that mess once again from the last tariff war. So at this point, they have the BRICS countries, they have a lot of their neighbors, so they are exporting a lot more than people expected, also importing more. and that is even though their export to US is significantly down. So yes, they have found new friends to play with, and they are not as vulnerable towards tariff wars as they used to be.
Liam, I mentioned that thing about Taco, and it seemed like that was what Trump did, as a matter of fact, when he came out with a tweet where he said, he was almost British, said, calm down and carry on.
Yeah, it's an extraordinary time we're living in at the moment, where sort of the investment decisions seem to be, you can almost govern them by the tweets that come out of the White House. Yeah, I mean, Trump always chickens out. That's the Taco sort of reference that we're talking about, and it's been quite a strong trade in the last 6 months or so, since April, that he will back out, because he realizes he's got to maintain some sort of rhetoric at home to keep his fan base, who generally are very, very anti-foreigners, buy into the whole tariff thing and so on. He's got to keep them sweet, but he's also got to at least talk to people around the world, even though he doesn't like it necessarily.
Yeah. So more out of the taco than out of the deal is what we're looking at the moment.
Yeah.
One of the things that you guys keep pointing at is the strategy that you have when you enter the market. That same goes, of course, for the 3-point playbook portfolio. We talked a little bit about it on Friday, saying it was up more than 32%, 32.45. I guess, like everybody else, you took a little bit of a hit. Where we at today, Liam?
Glenn? Okay.
We are.
I'm just finding it here.
Yeah,
we're
30%.
We were down 1.44 Friday, and that is measured in euro. So the dollar movement has been adjusted for there. So that was significantly less than the market.
And Liam, if we dive into the portfolio, of course, you were holding stocks, are holding stocks. Some of them are coming up with earnings this week, but also some of them were hit on Friday. If we look into the portfolio, and I know one of the ones that we're sort of anticipating a little bit is TSM.
Yeah, we don't mind giving away the secret that we're holding TSM, because we've been holding it since April, I think 25th of April. I think we bought it. We're up 71% so far. The stock dropped, what was it, 6%, something like that, 5% on Friday. It's down about 1.5% today as well. It's basically looking at the China rare earth minerals. Everyone's quite scared that TSM and other companies won't be able to do their job and manufacture what they're manufacturing, in this case chips for everyone, because they don't have access to the rare earth minerals. TSM came out over the weekend saying, actually, we're not that exposed. They've diversified their supply chain, so they get a lot of their rare earths from Japan and Germany now. And I didn't realize till today that Merck produced quite a lot of rare earth minerals as well. So that's why they're saying, again, coming back to the keep calm and carry on, it's not that big a problem. TSM's dropped down to, what's that, it's 10-day, 20-day moving average. We're a long way off. Looking at selling TSM. It's such a strong contender. It's the only company in the market globally that does what it does. So great company.
When we look over the various numbers, as we always do, about the quality, sort of the timing and everything, one of the things that you keep pounding over and over again is don't buy into earnings. At least that's your sort of strategy in that sense. They are coming out with numbers this week, so it's not a stock that would, if it weren't have been in the playbook already, that you would have been looking to buy.
No. And the reason we stay away from earnings, I mean, if this is our playbook page that we're showing off now, and it shows us that the first part is the quality side of things, and that it's a rock solid company. There's a lot of green on those boxes. Then we come down to that fluctuation in price, and just before earnings and just after earnings, you can see huge fluctuations for no logical reason sometimes when you look at it. A lot of it's because investors decide, okay, they've hit the numbers I wanted to, or they haven't hit the numbers I wanted to, so I'm going to come out of the trade. So their particular strategies take them out. We just avoid that volatility completely and buy either well before or just after the earnings.
And if we look at the numbers that you put up on the screen right now, there's one thing that of course everybody is looking towards. One thing is the earnings itself, but we have estimates to look at right now, and so it's not either a stock that you're looking to sort of we'll sell it now because it peaked.
No, not at all. It's in an uptrend, so we're just following the herd at the moment. We're just sort of it's going up. It looks like it might continue to go up. we've got
It,
exit
it
rules in
is
place.
it is expensive.
Yeah.
There's no doubt. But as Liam says, it's in the right industry. It's well positioned. So we're not selling just because they look expensive. We need to get the right exit signal.
And those signals are the ones that you go over and over every time
Within
we
our
talk
free
about it.
course,
Yeah,
everything.
exactly.
Yes.
You can look it up on our webpage, of course. And if you have questions for us, FOMO at MyStockScanner.com, also in regards to specific stocks. But you were talking the herd. If we're looking at a herd right now, there's a stampede towards rare metals. That's no secret. Everybody's talking it. TSM can say they're not going to use them, but there's a lot of other people using rare earth metals, and it's a pivotal point in the negotiations between China and the US. Hence, Henrik, what stocks to pick? Where should we look? Is there anything to buy out there when it comes to rare earth metals?
Yes and no. Normally, when we look at the 3-point playbook, we're looking for quality stocks, well priced, and so on. And I pick one here on the US stock exchange called MP Materials. And of course, they're not placed in Asia, in China, so that is a positive for that. We can see that they're not the best of quality. We can see that their earnings per share is fluctuating a lot. Their return on capital is not looking too good. The free cash flow, basically all the stuff we normally say, that is what we look for. However, we should realize that this is a bit of a special case because the entire world depends on these rare earth minerals. Just in US, in the defense industry, there are 80,000 components that on weapons they're producing in US that is from rare earth minerals that comes from China. That is 1,900 different weapons they can't produce if China shuts its rare earth down. So right now we are a bit at a place where we might be looking for some rare earth deals, not in our model portfolio, but it could be as a bit of a lottery play to come into some of these stocks that will probably have a huge demand for their product in the upcoming months.
You have one up right now, which is MP Materials. There's rumors that the government in the US will buy into that company to secure that they have their own rare earth metals. Of course, that will bring a stock to go up because that's what happened to Intel. It's just the way it goes right now in the market.
Yes, definitely. We could see that right now they are selling at, let's just have a quick look. They're selling at a price well, they're not making any money right now, so they're not even selling at a price earning, but in the area of 80 to 100, meaning that you're paying $80 to $100 for each and every dollar in profit they make or they expect to make in the future.
You see, that to me, Henrik, sounds like a lottery ticket. You almost.
It is. Normally, we don't take that.
And I know that you guys look towards how can you then invest in, I won't say the hype or the herd running, but you try to look at companies that are associated with rare metals. And you found one, as a matter of fact.
Well, I hate to say it, but it was actually Liam that realized that.
There we go.
Yeah, that is a tough one. No,
we'll
the
put
thing
that
is,
as a quote on the headline of the show, shall we? When we send out the recordings?
I think so. That is for once he realized it. No, the thing is that all the way back in 2021 and 22, GM, the automaker, actually were they looked a bit in their crystal ball and said, okay, we might be missing some rare earth material in the future. So they teamed up with, for instance, the MP Materials and a couple of others inside US. And actually also just here, I found a new article about here from August 25, where they're teaming up with some more companies, which actually means they are not that vulnerable to China playing the big bully with the rare earth minerals. So
but
GM,
how does it look then in the 3-point playbook? Because is it investable then?
That is the interesting part. The quality score is a bit low on 59. We normally like it a bit higher, but that is okay. Earnings per share is estimated to go up. We do like that. Revenue is fairly stable. the thing called the PEG ratio, where we are looking at price earning compared to the growth in the future, that is really low. So overall, the free cash flow is another story. That doesn't look too
It is a
good.
car maker, but yeah.
It is a car maker. So if we look at the value chart, it's actually not that bad. It's not a stock we would just pick up right now, because the difference between our base case and our bear case is simply not big enough. There's not big enough reward for the risk we are taking. But it's not that bad compared to being a US automator, which by nature is almost a disaster.
I was trying to coin sort of a taco phrase for Liam. The problem is it comes out to liar, because it's Liam is always right. And we can't really use that on the show, I
Something
think.
my wife says all the time. Yeah.
But let's not make it synonymous with
Yeah.
when you are suggesting things that we, as a matter of fact, do like here on the show. One of the biggest thing of the week is, of course, that we have earnings. We don't know what numbers we're going to get, but we know that we're going to get earnings because they're private companies and they are still open for business, so to say. And Wall Street are looking forward to numbers from some of the big banks. Liam, the chatter about what to look forward to in the days ahead, when we got numbers from basically everybody: J.P. Morgan, Citibank, Wells Fargo, and Bank of America.
Yeah, we got a lot coming out. As you say, Citibank, BlackRock is another one. Yeah, the banks are an interesting point at the moment. So there are a couple of areas that they look very strong. So if you look at the playbook here, you can see, this is BlackRock. There's a lot of green out here. So you've got earnings per share is climbing. The PEG ratio is below 2.5, which we really like. The analysts really like them as well. 4.5 out of 5. The analysts are dropping their recent their analyst expectations there, but something we'd keep an eye on and be a bit worried about. But the company itself is pretty good, and you can see from the value chart that there is a bit of growth in there going forward into next year. The concern that I have over both of these, Citibank as well, looks pretty similar. Lots of green. Revenues are dropping though, which comes to my main concern here, which is banks make money out of something called interest, the interest rates, and the difference between the interest rates they charge the customer and the interest rates they get charged for holding cash. And so the issue that you've got there is that with interest rates coming down in the US, already coming down elsewhere in the world, banks are going to be squeezed, so they're not going to be quite as profitable as they normally are. You also look, BlackRock in particular, I mean, they announced last week investing $40 billion into data center movements. We've talked before about the bubble in AI. If that does burst, then a lot of the banks will be holding assets which just aren't worth what they're marked down as on their books. So they're the two issues that I see with the banks right now.
If I may add to that, just a quick thing, a positive thing for the banks, that is that Trump have promised to deregulate the entire banking industry, meaning that they can basically loan money out to everyone. We had back in the financial crisis, we had the ninja loans where people borrowed money without any assets, any job, any income, anything. And that is a bit where we are going right now with the deregulation. That means for some years they can make more money until they can't, and then it hits.
And it's a fact that we have known that because it was one of the things that Trump said right away. So it might be priced into the earnings already. We shall see over the coming days. And of course, we will talk more about those numbers coming. Right now, we are looking at Denmark, because the thing is that Novo Nordisk had their price target lowered by the Swedish bank SEB, and they lowered it from 625 to 530. But there's a kicker here. SEB still said it's a buy. Guys, is it a fair price? 530?
Yeah, that's a good point, or a good question here. First of all, they're lowering to 530, and we have tried to figure out why they lowered it. It might be something about the eye disease with the Simpic, but if we're looking at it in the value chart here, we can see that it is a fairly good quality company. However, the estimates have been dropped a bit for future growth. We were in Novo Nordisk just for a week or so in our portfolio, and then we sold it again. At that point, the estimates were significantly higher for the future, meaning this channel here, we're going a lot more upwards. It's not that there's not any potential upwards depending on where we put the channel here. But right now we have a base case of 11% up and a bear case of 11% down. I know the analysts are believing in 17%, but right now it's going a bit too sideways here. We do like the ones with earnings channels going straight up. And we're not seeing this right now, so we are a bit holding back on the Novo deal right now.
Of course, we will be talking more about all the stocks that we mentioned here in the program. Some of them we hold in the 3-point playbook portfolio, which we show every Monday. We talk about that. On Wednesday, we have the Wednesday watch list, which is what our members are looking for at our platform. And on Fridays, we pit 2 stocks against one another. 2 stocks that might go up against one another in the future could be Pepsi and Coca-Cola, because they're sort of related. And why do I bring that up right now? Apart from that, I'm a little bit thirsty, is that it has something to do with number of the day. I mentioned the $25.87. That is what Warren Buffett gets in dividend every second of the day, 24/7. He makes that from Coca-Cola stocks that he owns. He has 400 million shares. And as said, one thing is the $25 a second. Per minute, it's 1,500. His hourly income is $93,000, and his daily income from Coca-Cola is 2.23 million. Guys, what do you say? Dividend stocks, is that the future?
He probably had a good weekend then. If we're going back to your first question today, I reckon he was all right.
Yeah.
No, but your question about dividend stocks is a good one, Jesper, because a lot of people ask us if we are into the dividend. There's this FIRE movement with financial independence and all that. It's not that dividend is bad, not at all. I'm not the biggest fan, but there is a bit more because when I get the dividend, I get taxed, and it's kind of just giving me my own money back. When I invest in a company, we found quality, we found good potential. I actually like the company to keep the money, because if they're good at running their business, I would like them to keep that money to grow the business with. I'm not budgeting with getting the dividend out. I might do that one day when I get older. But right now, I'm actually not going specifically for dividend stocks. I would like the company to grow instead.
I think the playbook is definitely focused more on that. We get quite explosive growth in 57, 58% of the stocks that we go into, and you tend to get the more explosive growth in companies that don't pay the dividends.
We do have a dividend tab up here. Yeah. Not that we should go into it today, but we do have it. So the information is there. You can see the growth in dividends and so on. It's not our focus when we invest.
I'm still going to hold on to that. He had a $4.5 million weekend, and that's going to be the number that I'm going to remember from this one. But we have an explosive week coming up. As I said, lots of earnings are coming. We're not sure about what numbers we're going to get, from CPI to unemployment numbers and what have you. You have a bunch of Fed members coming out to speak, and we will get a little wiser. Is there anything in particular, Hans, that you're looking forward to in this week? Any sort of, a speech, a number that you look forward and hoping that you're having?
No, I think the earnings will be the macro this week. I think there's so much uncertainty. Of course, everything can be turned around by a post on True Social or something. Then the day can be completely going from black to white or the other way around. But right now, the numbers I'm looking at, I'm trying to see what earnings are the banks coming out with. And especially, how are the market reacting on them? Are they surprised positively, negatively? So I think we are going into a nervous week where everyone will stare at the Truth Social account from Trump and then some earnings numbers.
Well, you guys, for sure, we will be back on Wednesday. We can't hold your hand 24/7, but you can check us up on all the social medias, which also means that you can take a look at the webinar that Hans Henrik did last week on nuclear. Definitely an interesting webinar, and also a place where the herd is running at the moment to look for nuclear stocks or associated with it. Go check us on Facebook. Go check us on our social medias in all, and of course on our platform. And do write us questions at FOMO@MyStockScanner.com. That's a wrap on Monday's edition of MyStockScanner Live. Remember, stay smart, stay strong, and let the 3-point playbook do the heavy lifting. Well, I'll see you guys on Wednesday at 12 o'clock. Have a good one.